Good morning, everybody. It's the 15th of November. We are Signal Centre Talking Ball. Happy Monday to you all, and it's myself, Joe, and Steve this morning back on the old podcast. 498 today, Steve.
Oh, getting close, mate.
Yeah.
498. So Wednesday, I'm actually thinking Wednesday. We might not actually do one Wednesday.
No, because I will be not around, and you
And
might not be either.
no, so that'll be could be the 500th. Maybe we should sort of like hold off on the 500th until Monday or something when you're all back. I don't know. We'll have a chat about it. But I think people would be desperate to sort of hear our wisdom, so it may not
So
be a
every
good
time
idea.
people tune into this show, if they follow our ideas, they could have made 0.16% per show. Not a bad
Wow.
return, is it? Better than you get in the bank.
Definitely better than the bank. There's a lot to be said about that. Yeah.
Cool.
Not bad.
Okay, let's get stuck into the headlines over the weekend. So Bojo is under pressure. He's battling to get his premiership back on track as there is mounting allegations of impropriety against him and his Conservative colleagues, which seems to be spinning out of control. They faced a fresh barrage of questions over their conduct on Sunday, the 11th straight day of negative headlines against the Tories since the Prime Minister's decision to block the suspension of prominent Brexit-backing MP Owen Paterson for paid lobbying. So classic stuff from the Conservatives, it would seem. Mm-hmm. COVID seems to be making a bit of a comeback, and certainly an unwanted one in a number of European countries. Austria is putting unvaccinated people under lockdown from today, which is obviously pretty drastic for a move. The only Western European country to have done that. I think Germany are favouring the same sort of methods. I don't know how that would go down in the UK if obviously there is a population of anti-vaxxers and people that, for whatever reason, of their own, haven't wanted to get vaccines. And it's, they're sort of being pushed into a corner with that, aren't they? A little bit.
Yeah, absolutely. I think sort of like everywhere it feels like that is the way that the world is going. If you're not vaccinated or double vaxxed, and even boosted, you're sort of restricted on what you can do in terms of a holiday or going abroad. So I think it feels like that's the way we're being forced. Should we stand up for ourselves, Joe, or just sort of like
I'm double vaxxed, I don't care. But
are you boosted yet?
No, not boosted yet. No, but if people can make their own decisions about these things and they've got their own reasons for it, and if they can't express those opinions or are restricted in whatever way, then I'm not sure that's right either, really.
No, definitely not. We are being forced down a very dangerous road.
Yeah, well, we'll see. Hopefully we can avoid that in the UK anyway, but be interesting to see what the fallout is from Austria. I see Holland have gone back into a lockdown as well, and so has Latvia. I guess Germany will be the sort of catalyst to see how they approach it and if they take similar sort of measures to that of Austria. What's going on elsewhere in the geopolitical scene? We've got US President Biden and China's Xi Jinping meeting their first virtual summit tonight amid tensions between the superpowers over issues including the origin of COVID-19, also human rights in Hong Kong, and also the future of Taiwan. Hopefully Pres Biden can stay awake for that. And
Sleepy Joe.
That's pretty much it, I think, on the news front. Anyway, let's get stuck into some charts, shall we? Much happening, Steve? Anything that's catching your eye, or much the same as last week?
Yeah, pretty much a bit of a follow through from last week, really. We'll start with oil weekly chart, where impulsive 5-way move looks like we've hit a top here and correcting lower. This is we've had 3 negative weeks, looking at the off to a negative start on the 4th week as well. Looking at this bullish channel on the daily chart, and we can see this nice bearish outside candle after retesting the bullish channel higher and failing and moving lower. So we've got support coming in around about the 77.50 area in WTI crude oil. Brent crude oil has a similar sort of picture. had a retest of the bullish channel and has reversed. Support coming in for that just below the $80 mark on Brent. Natural gas collapsed. I think I was going, that was my gun to head, which was pretty horrendous on Friday. Bearish engulfing candle has engulfed the previous day's price action from Thursday. And you can see Friday negative. We're looking at 475 as the support. Really needs to get back above 525 to re-engage the upside potential. Gold has continued higher, 1875. It's hit a 50% retracement of the move, which we've sort of said before, from the all-time highs down to this swing low, and we're around about the 50% retracement area. Apart from that, 1875, there's probably not much more resistance around here. We've got this congestion or this previous swing high from around May time, which would be interesting. That's 1916 was the top there, just in front of the 61.8% fib, which is a far more interesting level than the 50% one. So gold remains pretty bullish, and on the short-term chart, as started on the sort of like back foot Sunday night, has had a pullback lower, but I'm sure buyers will be looking to sort of enter around about the 1840 down to the 1833 level. That would be an ideal dip buying, good risk reward trade strategy from there. Taking a look at cryptocurrencies, what's this bad boy done over the weekend? 69,000 was the high, which was posted on Wednesday last week, I think, and we've sort of like sold off, and we've managed to get just above the 66,000 level, trading just below there now. So it's a little bit more positive. Again, we saw, let's look at these. Let's look at the daily chart, see if we got a decent spike on the volume on the daily chart. No, just a sort of like normal day in the sort of like in the world. If anything, the volumes are dropping off. Momentum remains negative as this price is moving higher. We've saw that sign of bearish divergence. I'm looking out for these big spikes here, and that will indicate to me that the bulls are back in town. So not yet. I still think this is drifting higher on low volumes. So only when we see a decent spike higher, and normally you see that after a sell-off. You see the sell-offs here, sell-off here, spike higher, and then that steadies the ship before the next projection higher. So still a bit of a bit to play out in the Bitcoin. Still in a bullish channel in Ethereum. All-time high coming in at 4,870, trading just below there, 4,721. Support really coming in around about the 4,500 level. Ripple sideways price action on the daily chart. Really not a lot to say here. If anything, a bit of bearish divergence. And yeah, ignore that for the minute, I think. Cardano trading around 205, so it's above the support at 190. But also below the resistance at 238 to 247 on Cardano. That's again a bit of sideways price action, a bit of lack of interest, we would say there. Indice front, let's take a look. The weekly chart, again, a third positive week for FTSE. So that's pretty good, although we did sort of like retrace from the highs at the 7,400 level, trading 40 points below that at the moment. So that's within reach and off to a bit of a positive start. The dip has been bought this morning. DAX, again, I was short of this last week, and that has continued higher. So quite pleased to be out of this and really waiting for the next indication of where this should go. The dips continue to be bought. Price action moving higher. All-time highs posted at 16,129 this morning. So that's a new all-time high this morning. Let's get the little price label on there so that we know that. 16,130, we'll call that. Dow Jones posted an all-time high last week, but it was a bearish looking week. Closed lower than it opened on the Monday, and we're trading around the Friday's close, so 36,130. We're about 500 points, sorry, below the all-time high, which we posted last week. Nasdaq posted a hanging man candle last week, so that's interesting. If we can manage to get below the 15,900 level, that could retest this previous resistance, now turned into support at 15,700. Watch out for there. Really have to the all-time high coming in at just around 16,460. S&Ps, again, all-time highs. That was posted, well, not last week, the week before, 4,720, hanging man candle, or maybe even a doji. Doesn't look too clever, really. The price action from last week, we did have the sell-off during the week. Bulls managed to push back up towards the open of last week, towards the Friday's close, and we're trading around there now. So just below the all-time highs, 4,720, possibly try and retest that early this week, and then see if we've got enough momentum to push higher again. Aussie 200, again, similar sort of price action on last week, and with China 50 looks a little bit more positive after we had a couple of weeks of really selling off aggressively there. 14,500 for me is the level to watch there. We're only 1,000 points away from that, not much in terms of China 50. Hang Seng posted a bullish engulfing candle. We engulfed the body of the previous week's candle, so that's positive, and off to a sort of like a positive start this morning on the Hang Seng. Again, Nikkei initially looks like a positive candle because it's green, but the reaction lower and the sort of retracement higher leaves a little bit of uncertainty in the air. Really need to get above the 30,000 level to relax a little bit on the bull side of things. Otherwise, a breakdown below 29,000 could be interesting for the bears. That's about it, Joe.
Done. Thank you, Steve. Okay, let's have a look at FX then. So, pretty similar really from what we spoke about last week. This is dollar index continues to trade within this bullish channel, and while we're above this 94.74 level, I think there is scope for further upside. Obviously we saw this impulsive break higher here on the 10th of November. We backed that up with further gains on the 11th, and just a little bit of consolidation really here, nothing too drastic. Could quite comfortably see a pullback to that 94.74 level to retest the new support. But ultimately think higher prices will be seen. The 94.74 level is relevant because of that on the left hand side, the highs that we posted on the 25th of September. So nice looking bottom pattern on the daily chart, and looks like we're heading higher towards this next level above, which is at 96.09, which is the 50% fib level from this entire move here. So from the highs that we posted back in March 2020 down to those lows we posted in January earlier this year. So euro dollar on the flip side of that continues to look quite negative. We've got this big head and shoulders top pattern that is looming large over the price action. We're trading within a bearish channel. We broke down through key support at 115.25 on the 10th of November, and there's been no sign of the buyers wanting to step back into this at the moment. So if there is any relief or push to the upside, it's likely to be capped by this 115.25 level, and sellers should be pretty quick to step back in line with the dominant trend. Ultimately, we've got targets down at this kind of level here, which is at 110.56. That's the measured move of the head and shoulders top pattern. So for me, that's where price is heading over the short to medium term. If we take a look at cable, that broke down through key support last week at 134.11. We are trying to retest that at the moment. Been a bit of a bumpy start for sterling today if we take a look at some of the other currencies in a moment, but while into this kind of level here, I do expect there to be some more selling pressure and for the upside to be fairly limited around this kind of zone. So I may take another look at that as my gun to the head trade, which was also my trade on Friday. Didn't make any money on that, unfortunately, but still fancy it lower. And I fancy it down to this 38.2% fib level that we've got in yellow at 131.65, which is relevant because it's the 38.2 of this entire move here. So from the lows that we posted in March last year to the highs that we posted in June this year, then yeah, 38.2 looks like a pretty decent level to target, I think. So just on to Sterling against Canadian dollar looks like it's rallying into some resistance and seems to be stalling. It was the intraday charts actually were catching my attention. What was it specifically? It might have been New Zealand dollar. Yeah, I mean that's a pretty strong move to the downside there. This is only an hourly chart, but there seems to be some decent appetite for the riskier currencies like the New Zealand dollar and the Australian dollar this morning. Let's take a quick look at Aussie US dollar. That's moving higher following a bit of a sell-off in recent days, but all seems to be pushing a bit higher today. Aussie yen has been typically the one that's been most of interest to me because we've got this inverse head and shoulders bottom pattern. We've seen a pullback to test the neckline of that pattern, and also a 38.2% fib level. So buying in and around this zone seems to be a pretty good opportunity from a technical perspective to get long. And we're backing that up today with some further gains. So that looks quite interesting. And again, yen displaying more weakness. So the other market that was quite interested in watching last week for a potential breakout was dollar yen, because it seemed to be forming this bullish flag, and this was in line with this major resistance level at 114.32. We haven't been able to overcome that. In fact, we posted a bearish outside candle on Friday, and a bit of indecision today. So still keep an eye on that. If we can clear the top of the resistance level at 114.32 on a closing basis, as well as taking out this potential flag looking pattern, then we'd get that confirmation that we're looking for, and higher prices could be seen, I think, over the short to medium term. That's it from me on the currencies.
Nice one, Joe.
So let's have a look at the gun to the head trades from last week. We're still slipping a bit on the LP&L. Can't really seem to capture much. I don't know if it's just due to conditions in the market not really being that much volatility or follow through, or markets behaving in a technical way, which is certainly a requirement for us to do any good at this challenge. So hopefully we can get back on track today, Steve. We've got a half an hour loss on cable last week and a 1 hour loss on natural gas.
Yeah, not very clever, is it?
So what have we done over the last week? I was up 0.22 R, and you were down 3, 4. Yeah, so 4 R down basically.
Oh, that's not good, is it?
Sorry, 3.5 R down. Sorry, last week. So only needs one good win, Steve, and we're back on it. So can you please pick one?
Don't know really.
Right, I'll go while you're waiting.
You go.
I'm going to go with cable again, as I said earlier. The reason being, this is the daily chart. We have broken down through this key support here at 134.11, and for me, I think this will cap the upside in the very short term. So let's take a look at the hourly. I've already got it drawn on. I'm going to sell it now. Get a couple of extra ticks there. 134.15. Targeting a move down to this fib level at 131.65, and I'm going to go for a really tight stop above the highs that we've posted over the last couple of hours or so. Only a 30 tick stop at 134.45. So I'm looking for 8.5 R on that today, Steve. How do you like that?
Joe. Yeah, I don't mind. Will you share that? Because I think I need sort of like a little bit of a carryover here.
I would always share it with you, Steve. Definitely.
Excellent, good man, lovely. Okay, let's. The one that looks really interesting to me, and I would be positive about, is gold. We've got off to a bit of a correction this morning. If we look at, right, here we go. This is what we've done overnight. We were up at looking quite rosy on Friday. 1865 was the close. And we've had this sell-off this morning. It's run into the cloud on the hourly chart. So yeah, I think I might go for a little long in this, and see us sort of squeeze all the way back up to this 1880 level. I'm getting long at 1861, targeting 1881, and let's have a tight stop. Let's have a stop at 1856. So a really aggressive trade. It's gives me a 4-to-1 chance on this. Really, probably stop would be better off if it was below the 1834 level. But I'm going to remain aggressive in my trading. It's in my blood, baby. That's it.
Boom. Good luck.
That works.
Yes, let's hope. Okay, so data today, 1:30, we've got the US Empire State Manufacturing number. The index is expected to rise to 20.2. That's the only high impact bit of information that's due out today, but we do have that China theme to keep an eye out for, with Biden and Xi Jinping expected to hold their virtual summit later today. So we'll be keeping an eye out for any commentary on that. Anything else to add, Steve, or are you all good for us to wrap this up on a Monday
All good.
morning?
Yeah, all good to wrap it up, mate.
Cool. Right, let's do that. Have a good day, everybody. We'll be back tomorrow morning. Until then, trade safe.
Cheers.